So the Dallas housing market has shifted, and if you're moving your family here to the Dallas-Fort Worth area, you're probably hearing everything from the market is about to crash to buy now or you'll be priced out forever. And then there are those people who don't even really seem to have noticed anything happening at all in our real estate market. But here in DFW Metro, though, our inventory is up, the days on market are longer, and the builders are out there dangling so many different types of incentives that look amazing up front, but can sting a little bit later on. And if you are planning on relocating here to Dallas, well, missing this could cost you sometimes even up to 5 figures. Yes, you did absolutely hear that right. So today I'm going to break down what has changed, who has the leverage, and the 3 different myths, I guess you want to call them, that are costing families money so that you can make the decision to move a little bit more smart. But first, my name is Kristen Carpentier. I'm a local real estate agent here in the Dallas-Fort Worth Metroplex, and I specialize and I love helping people relocate here to the Dallas-Fort Worth area. I live here, I work this market every single day, and I'm going to show you what's actually happening here in DFW. Which areas might possibly work best for families who might have to, even move again in the next couple of years. And then we're going to talk a little bit about how some of my buyers are walking into equity on day one instead of overpaying in a panic to just purchase and hurry and make a move. Every week I am talking to families and helping them make that relocation move here to DFW, and I love being able to track the different data that is out there. I'm here to help negotiate deals and see where money is won or sometimes even lost, especially around some of the different school districts, the communities, taxes, and our special districts, and a lot of the resale homes. But watching the headlines isn't going to tell the whole story. Across DFW, active listings and months of supply are up. And in Denton County, we're at over 4 months worth of supply. And over the last 3 years, it's up over 38%. And in Collin County, it's up over 34%, which is where a lot of the popular cities like Frisco and Prosper and McKinney are. And it's up about 27% in Dallas County. And for the entire MLS here in the Dallas-Fort Worth area, it is up around 19%. And our days on market have continued to be stretched compared to, we'll call it the olden days, all the way back to 2021 to 2023. I know, yes, I'm joking. Those are definitely not the olden days, but it kind of seems like it in the real estate world. And Collin County specifically has median days on market of around 39 and is up over 44% in the last 3 years. Denton County is sitting at around 37 days on market and is up over 42%. Dallas County is showing a median days on market of around 32 days and is up over 33%. So looking through all that data, pricing is certainly a little bit mixed. While some headlines may be shouting that price reductions and some homes are sitting for days and maybe even months on the market, we're still finding that a lot of the hottest, most turnkey listings can quickly move. But yes, many homes are definitely taking a little bit longer to sell and seeing quite a number of price reduction. Now, translation for all of this and all of my relocating friends out there, this is what we're calling a negotiation market, not a feeding frenzy. So let's get into some of these myths that I keep kind of talking to a lot of the different people about. And myth number 1 is that prices are continuing to surge everywhere. Offers out there are actually what is going to tell the truth. The median prices have flattened or even dipped modestly in a lot of the DFW areas, while other listings have actually ended up climbing. Now you're going to see a lot more price cuts and longer marketing times, especially outside of the most updated entry-level homes. So let's talk a little bit about the different price bands out there, the different chunks of where people are looking and wanting to pay for a home out here. And entry-level homes, let's kind of talk about under the $350,000 range. And it's proving that in this price point that a lot of these homes are still pretty competitive if you're actually going to make it turnkey and they're going to be located in a top school zone. Then we have more of that move-up home, which is going to be obviously above $350,000, but closer to around, let's say, the $600,000 range. And this is a little bit more of the softer segment, and we can expect to see a lot more days on market and quite a few more price reductions. In fact, I just dealt with this with one of my own listings. We didn't really have to go down, but we had to be a little bit more patient, and thank heavens my clients were, to watch it, sit and wait for the perfect buyer. So all in all, they did have to come down just a little bit, but but patience was key, especially in that price point to get their home sold. And it all ended up working out absolutely great for them. Now, then we're going to be looking a little bit more at the luxury price point, which is going to be over that $900,000 price. And this is certainly going to be more of a case-by-case basis. And you're going to be looking at a lot more quality and maybe where the lot is located and the location desirability. Is it in maybe a gated community, or does it back to maybe a golf course, for example? Is it sitting on a little bit more of a larger lot size? So that's definitely what we're kind of seeing more in that luxury market price point out here in the DFW area. But let's talk a little bit about maybe our buyer playbook, what you can expect if you're coming out here to purchase a home. So in the current market, I would probably recommend that you are looking at targeting homes that may have been on the market for at least 30 days. Then you're a little bit more likely in that time frame to be able to ask for more closing costs or even a permanent rate buy down if you're needing to finance that property. And you can be a little bit more picky on the home's condition as well. So you can start to ask for a lot more repair requests, and it's going to give you a little bit more leverage when that supply is up in these particular areas that you might be looking at. Now, another example, I just closed on one recently that my clients were able to come in with an aggressive offer because it had been sitting on the market for quite a while. And in the end, it wasn't an awful house. We already knew what we were getting into, but there were kind of some things that he really wanted to make sure were taken care of because of our inspection report. And we had that leverage to get some stuff done. And to be honest, we were able to get him some things redone in the bathroom, some new windows, and, a little bit more in the seller credits based on that home inspection report. And he really ended up getting a super great deal on that house. And also, if you are doing your research online, you're going to see the list prices, but in the MLS here in Dallas, I can actually see what homes actually sold for, plus how much the seller paid and possibly maybe their closing costs or the incentives that they were giving to the buyer. So all those numbers are listed for us in the MLS, and we can actually see what the true numbers were we can see a little bit closer about what those numbers are when somebody closed on a particular home. And that's another way that we make sure that you're not the neighbor who probably paid $20,000 more for the same floor plan. We're going to look at the price per square footage, the true sold comps, and which homes had big credits attached so that you can make decisions with real numbers, not just some of the pretty photos that we have out there on Zillow, for example. Now, for our seller playbook, though, it's always going to be recommended that you price your home for today's market and using the comps that have closed from the last 90 days. But more importantly, looking and seeing what homes are currently on the market that may just be sitting. In fact, lately, because of the time frame and the type of year that we're looking at right now, I'm even looking at canceled and expired listings to see what might be out there and to see what somebody had possibly pulled off the market to relist in the spring. So what do these homes look like? Have they been updated? Are they in a desired neighborhood or location? Or do they need some work and back up to maybe a busy road that not a lot of people are thrilled with? So then if your showings are a little bit lighter, plan price reviews at around day 14 and day 28. And also possibly, highly recommend, think about fixing those walkaway items before actually putting your house on the market. What are the condition of the floors? Could your home use a fresh coat of paint? Have you had the roof looked at here in Texas? Always a big one. And have you, more importantly, had your HVAC serviced, especially if you have just gotten out of the summer months? So if you want to buy or sell in this particular market, you're going to want to make sure to be educated and prepared for any of the situations that could come up. So of course, give me a call and let's discuss a little bit further. Now, myth number 2, sellers are going to still have all the leverage. I mean, really? Well, in 2021, sellers definitely were calling every single shot out there. They got to keep all of their negotiating skills in their pocket, and their sales prices went up, and they weren't really having to worry about any of the repairs or contingencies on their property. But now we're here at the end of 2025, and leverage is going to vary by the price band and even more importantly, by the home's condition. With supply being a little bit more near balance, buyers have options, lots and lots of options these days, and inspections are going to matter again, and great terms can still win the deals. So sellers really should probably expect some more inspection asks and seller credits to keep contracts together. Now, for example, I just had one. It actually ended up being a for sale by owner that my client knew about. Is a good friend of mine. He knew about this property and asked if I would help him write the deal because he knew it had been sitting on the market for a while. Well, the inspection was not so lovely. And we did end up coming in and asking for quite a bit of seller credits based on what the inspection was. Again, a for sale by owner who didn't do all of the necessary upfront inspections and kind of getting the home taken care of beforehand. But it absolutely worked in my client's favor. And we got some really good seller credits and price reductions, and all because of what came up in the inspection. So those are definitely going to be on a case-by-case basis. But again, the seller wanted to get the home sold. I guess they thought they were saving all of this money on paying real estate commissions, but it all worked out in the end. My client was super happy with what we were able to get him for this house. Now, again, it's always going to be the homes that present perfectly that are still going to be going quickly. And everything else is going to be trading in on the terms and most likely a little bit of patience. So I was just talking to a client about a gorgeous home that honestly I was kind of surprised was priced so well in a particular neighborhood. Granted, it was a little bit smaller and the home was a little bit older, but the updates that they had done on their home were done super well, and you'd probably find a lot of those updates done in a higher priced home, not the older one for the age of the house that we were actually looking at. And you could tell that the owners did everything to make sure that this home stood out compared to a lot of the other homes that were on the market. And because of all of that, it had gone under contract for 4 days and even sold slightly above the asking price. So there were probably multiple offers on that particular house. Obviously, I don't know for sure, but based on the numbers that I saw, that's probably what the sellers were able to get. But we certainly don't see that as nearly as often these days as we did just a few years ago. So always run those numbers, always keep your eye on the market, and be ready to jump if you're actually in the market to move pretty quickly. So for our seller reality check, you might go in expecting your home to take possibly 30 to 45 days to sit on the market and get a contract, unless you are, of course, the best looking house, the best priced option in the neighborhood or the particular area that you are living in. So definitely something to keep in mind, that your home's probably most likely not flying off the shelf at sitting there just in under 2 days or a weekend. Now, myth number 3 is that the new construction is going to be the safest bet for everyone right now. Now, for sure, we are seeing that a lot of these builders are being very aggressive again. We're seeing a 2-1 or a 3-2-1 buy down. We're seeing those special first-year rates and some very attractive closing cost credits and incentives. Well, those can be great for sure, but if you understand the fine print that the builder is offering when you go to purchase that house. But there's a thing that sometimes taking $15,000 or $20,000 off the price and using your own lender is better than taking maybe a flashy rate buy down that's baked into a higher purchase price. Now, if we are working together, you and I, we are going to literally look at both scenarios. We're going to look at the discounted price with your lender and the builder's incentives, and we might pick the option that gives your family a little bit more of that best combination of monthly payment and long-term equity. So some other things you might want to check out are those teaser rates with the step up. Make sure that when you're talking to a lender that you actually underwrite your budget at the fully adjusted rate, not just the rate on year 1. Something I always stress up front is to know the final monthly payment number, not the attractive one that they're trying to use to get you to sign on the dotted line. So be prepared also for the insurance to possibly jump in around like year 2+. So check the rates on a couple of different homes and make sure to shop the rates with a few different companies. Because here in North Texas, premiums have trended so much higher than a lot of the other areas throughout the country. So make sure that you are budgeting realistically. I always say I would rather aim higher with a number and be grateful if the number does end up being a little bit lower. I would rather be prepared for the worst case scenario and make sure that I know that I can actually afford those numbers. So then we have our property taxes and the special districts, like homes that are located in a mud or a PID that we're always talking about here. Many of these master plan communities in a lot of the growing suburbs have to add these in. Your year 1 escrow may reflect the land only. Then the full improvement value hit And I've had more than one person call me to discuss this particular problem that they had not been made aware of when buying a home in some of these particular areas. So make sure to verify a particular address by the city and the school district, and if there is in fact a mud or a PID. And should you buy a resale or a pre-owned home versus a builder's new construction option? Well, there is a possibility that you might be selling before the community is fully built out. It most likely means that you'll be competing with brand new spec homes and builder incentives. Like right now, I've already seen a few where the builders are offering interest rates that are much lower than outside lenders can offer. And even if the prices have gone up a little bit, they can still afford a newer construction home over the pre-owned home, and you could run the risk of losing a lot of money in the situation. So when does the new build actually make sense? Well, if you are planning to hold that property for, I would say, at least 3 to 5 years, it's really probably worth at least exploring and looking into. If you do feel better having that new home warranty and efficiency, and if the builder's concessions beat what a resale home will need in repairs and the updates that you would hopefully want in that house. So for your new build buyer playbook, price the year 3 payment, the rate step plus the realistic tax and insurance, and try looking for communities that are maybe near closeout. Make sure to get an independent insurance quote, and as always, verify if there is that additional mud or PID tax before signing. So who do we see that is actually out there selling their homes right now? Well, we're seeing some of those long-term owners cashing out despite the higher interest rate. They may be ready to downsize and pull the equity out of their home and pay cash, or maybe even use that money to buy an investment property. We're seeing a lot of investors that are trimming a lot of their holdings as the taxes and insurance and maintenance start to squeeze the margins that they're getting out of those investment properties. Especially in some of the lower priced homes, they may have been rentals for years and investors are ready to use their money somewhere else. And we're even seeing a lot of move-up sellers who are testing the waters, kind of looking to see if they can get a great deal on a larger home for their growing families by looking for homes in a more desired location that maybe have been on the market for a while, so they can get a great deal on those and ask for some of those seller concessions or have the seller pay for that rate buy down. And even a lot of these builders have increased choices to choose from all across Collin, Denton, Tarrant County, and a lot of these, in fact, all throughout the DFW Metroplex, as a lot more of these homes are being completed and ready for their new homeowners. So all that mix tends to create a lot more choice and more negotiation power for a lot of the families out there. Now, your timing and your tactics of when to buy. So seasonally, fall and winter are great for buyers here in DFW. Days are longer and sellers who must move start to get a little bit more realistic with pricing their homes. Then you pair that with a trend towards balance and you've got a lot more negotiating room. So if you're a cash buyer, you can sometimes start to shave even thousands off of some of these stale listings, and finance buyers can reach the same net with a lot of the credits and the buy downs. So as we kind of recap some of these quick checklists, buyers, always verify your tax rate. If there's a MUD or PID tax, and check your insurance quote. I'm going to say these all the time because I'm kind of surprised at the number of people who even call asking for advice when they really weren't made aware of some of these things. So before you jump the gun and fall in love with a particular house, check those numbers. And maybe try to target homes that you are looking at maybe 30 plus days on market, because there is a higher possibility of being able to ask for more credit and repairs. And you might want to even test your commute at the school drop-off times. And if you really want a new build, model your 3-year payment and confirm the incentives in writing, and make sure to double check them as well. That's where you really want a realtor, someone like me, on your side, and not just take the builder sales rep's word for it. Always recommend having somebody, a realtor that you are working with when you are negotiating a new build contract, even because the sales rep in the sales office is working for the builder. And it has happened time and time again where I've gone in and negotiated multiple times, and what it said and what the sales agent says that they can do, sometimes we already know how we can work some of those numbers and get you an even better deal. So just kind of saying. And as for the sellers, you might want to consider getting a pre-inspection and making some cosmetic updates. But more importantly, clean your home. Get it professionally cleaned and make that house sparkle. And of course, price for today's market. and plan that 14 to 28 day review if it is absolutely needed. Also, you can offer terms that buyers value. If you do need to get more eyes on your property, consider offering to help with closing costs or that permanent rate buy down, and being flexible with your date and your timelines. And always, always, always have professional photos and videos done and include a clear schools and commute story in your listing copy. Because if it's a family that is looking to move to your particular area, that's kind of one of the things that they will likely consider. Because if I am working with families who are moving here to the DFW area, that's one of the top things that I'm asked for is about schools. So if you can hype up the area and the school district and where your home feeds into, that might really stand out to a lot of these buyers who do have kids looking for the right schools. So to wrap this all up, DFW has officially moved from a frenzy to a negotiation. And if you're relocating here, let me help you pick the right suburb for your specific wants and needs for the schools, your commute, and even those dreaded taxes that we have. And we'll game plan the numbers so that you don't get surprised in year 2 if you want a custom plan for anywhere here in DFW. Anywhere from Frisco to McKinney, Mound, Southlake, and even down south in Mansfield. So grab a spot on my calendar. As always, feel free to email, call, or text, and let's get these dreams to become a reality. And as always, if this is the first time to my channel, don't forget to subscribe so that every week you get notified when I drop new content, as well as like this video and leave your comments down below. Tell me the things that you are hearing and seeing and that you maybe want more information on. But as always, you can always reach out, give me a call, shoot me a text, send me an email, like I said. And until next time, take care.